Good morning. Welcome to the morning report for Monday, the 23rd of February. Let's start with a quick snapshot with a look at Aussie futures, commodities and currencies to see how the day is shaping up. It'll be interesting to see how the Aussie share market reacts when it opens this morning after the fallout over the weekend from a key US Supreme Court decision on tariffs. Index futures rose 0.2%, but that was before Donald Trump's latest reaction. Let's go back a step. On Friday, the court voted 6-3 to strike down Trump's sweeping tariffs. Trump responded angrily to that ruling that he did not have the power to unilaterally set tariffs on imports, vowing a new 10% levy. On the weekend, though, he increased that number to 15%. That rate is on temporary duties that will replace many of the levies ruled illegal by the High Court. Corporate earnings are also likely to drive market action in Australia today. The companies scheduled to report include Lendlease, Nuix, Ampol, Perpetual, Data#3, Chorus, NIB, Reece, Adairs and McMillan Shakespeare. On commodity markets on Friday, global oil prices held near 6-month highs as concerns remained about US military action, with President Trump pressing the Islamic Republic to halt nuclear weapons development. The Brent crude price settled at $71.76 a barrel, up 0.14%. Base metal prices traded higher on Friday as the tariff ruling reduced near-term risks to global trade flows and industrial demand. Copper futures ended up 1.7%, while aluminium futures added 1%. Gold prices rose 1.7% on Friday, supported by weaker than expected US GDP data. Spot gold traded at $5,103 an ounce. Iron ore futures were lower on Friday, down 0.3%. Let's look at currencies. Most currencies were higher against the US dollar in European and US trade on Friday. The euro ended at 1.18 US dollars. The Aussie dollar jumped to 70.65 US cents, and the Japanese yen strengthened to 155.08 yen at the close. Okay, let's take a look at overseas markets. On Wall Street on Friday, the Dow Jones Index advanced 0.5%, the S&P 500 was 0.7% higher, and the Nasdaq leapt 0.9%. So what contributed to the gains? The US Supreme Court ruling striking down President Trump's tariffs that I mentioned at the top was welcomed by investors. These gains offset a weak GDP report and higher than expected inflation data. The court ruling potentially provides relief for companies burdened by higher costs from the tariff duties. Digital advertisers that stand to benefit from easing tariffs were among the biggest winners, with Google parent Alphabet climbing 4%. Amazon also jumped 2.6% as it sources up to 70% of its goods from China. Looking more closely at the US economic data that was released, the American economy grew less than expected at the end of last year, dragged down by a record-long government shutdown, consumer spending and trade. The government's initial estimate shows GDP increased an annualised 1.4% in the fourth quarter, after rising 4.4% in the prior period. Meanwhile, monthly headline PCE inflation rose 0.4% in December from 0.2% in November. US government bond yields held their ground as investigators navigated a tug-of-war between the landmark Supreme Court ruling and President Trump's swift trade policy countermove. The US 10-year Treasury yield edged higher to 4.09%, and the US 2-year Treasury yield was flat at 3.48%. To the European markets. European shares closed at a record high on Friday, with the continent-wide FTSE Euro First 300 index climbing 0.8%. In London, the FTSE 100 gained 0.6%. European investors cheered the US Supreme Court's tariff ruling. The personal and household goods sector added 2.2%, while the luxury sector rose 2.9%. Luxury brand Moncler jumped 13.4% after reporting a 7% rise in revenue in the fourth quarter. Looking ahead, here's what we're watching today. Reporting season continues in Australia, as I mentioned earlier. Today, it's the likes of Lendlease, Nuix, Ampol, Perpetual, Data#3, Chorus, NIB, Reece, Adairs and Macmillan Shakespeare. Overseas, besides the fallout from Trump's tariffs, the week will be dominated by quarterly reports from semiconductor giant Nvidia and key US software companies. Nvidia, the world's largest company by market capitalisation, will report on Wednesday. For its fiscal fourth quarter, the company is expected to post a 71% rise in earnings per share on revenue of $65.9 billion. Meanwhile, key software companies that are under siege from concerns that AI will upend their businesses are due to report too. Reports from major software players Salesforce and Intuit will be more significant than usual, given the AI fallout in the industry. The S&P 500 Software and Services Index is down about 20% so far this year. As for calendar items outside the markets, well, there's not much on the economic front in Australia today, but the big data print will be inflation on Wednesday. CBA economists expect the headline consumer price index to increase 0.4% in the month of January, with the annual growth rate easing to 3.7% from December's 3.8% pace. The release will be closely watched given its importance to future interest rate decisions. CBA economists also expect the cash rate target to be hiked by 25 basis points to 4.10% in May. For further developments in today's local trading session, please tune in to the CommSec Market Update podcast this afternoon, and of course, the Market Close video. Have a great day.